Good morning from Chicago. It's 8:01 a.m. Central Time on Wednesday, November 26, 2014. Happy Thanksgiving to those who observe it. May your meal tomorrow be a big, healthy one, and enjoy the football. Um, Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. A fair amount of news overnight centered around crude oil. OPEC members stressing that unity and cooperation should be key ahead of the Thursday biannual meeting. So tomorrow, OPEC gets to decide what they're going to do with their supply to counter these price drops. Saudi's oil minister Al-Naimi says the Saudis, the U.S., and others should not cut output. Market will stabilize itself. Producers should let the market determine oil prices. On the ECB front, more ECB members are contemplating QE at some point in the future. There's been discussion of QE kicking in Europe first quarter of next year. Juncker unveils his investment plan. Germany's October import price index comes in lower than expected. Actually, a lower negative, so better than expected year on year. Also a lower negative 1.2 versus negative 1.5 expected. So that's some good news there from Germany again after months of pretty bad news. Italy's November consumer confidence missed, came in at 100.2 versus 101.6. UK Q3 preliminary GDP is in line. The U.S., a slew of numbers, U.S. MBA mortgage applications came in at negative 4.3 versus plus 4.9. It's a lot worse. ECB reiterates prefers additional time to assess current measures with Q1. They largely agreed upon the time frame. October personal income came in at 0.2 versus 0.4, slightly worse. Personal spending 0.2 versus 0.3%. Durable goods 0.4 plus 0.4 versus negative 0.6. Durable goods are higher. Orders are higher. Durable goods ex transportation negative 0.9 versus plus 0.5, so worse. The market mover initial jobless claims 313,000 versus 288, so this is the highest since early September. Continuing claims came in at 2.316 million versus 2.35. This is the lowest since December of 2000. October PCE core came in at 0.2 in line, and then October PCE deflator came in at 0.1 versus 0.0. So that's what we saw at 7:30. Lots of numbers that came out all at the same time there. S&P fair value negative 1.4. The cash is trading above the future by 1.4 points. Looking ahead at the economic releases for today, 8:45, just 15 minutes after the open. November Chicago PMI. Remember, this comes in early, could come out as early as 8:42, 12 minutes after the open. The expectation is 63, prior 66.2. And then at 8:55, 25 minutes after the cash open, November final, University of Michigan confidence, expecting 90.0 versus 89.4 on released on the preliminary. 9 o'clock, October pending home sales, 0.5 expected, 0.3 was prior, 2.5 expected for the year versus 1% prior. Strong home numbers. Also at 9, new home sales, 470,000 expected versus 467,000 prior. At 9:30, an hour after the open, weekly DOE crude oil inventories. And then we're expecting, because of the holiday tomorrow, we're expecting at 11 o'clock, we're looking for a weekly EIA natty gas inventories. And then the Treasury sells 7-year notes at 12 o'clock. And then this evening or this afternoon at 3:45 Central, New Zealand's October trade balance is expected. Let's look at the market and see what we've done. So yesterday played out just just as expected. Really didn't expect this market to go anywhere. OAOR, the opening swing was 2073 to 2069 and a quarter. Let's look at the short-term chart just to see what how it played out. But essentially, we came in with a very tight box profile left behind on Monday, opened, expected responsive selling, which we didn't get right away. It actually pushed the high of the year by 3 ticks to 2073 up here before responsive selling came, and we're looking for responsive selling back to 67, and then potentially for a push, if it breaks through the low, a push for 61, 60, 75. That was the key idea. And what it did is it found the sellers early on, and then it pushed right through this tight value area and tight range from Monday to test the other side. Here's a test of the mid right here. Let's see. There's a test of the mid. Once it breaks the low, it tests the mid. This looks like a setup to get short. That's a setup for me to get short after breaking the low, but the market decided that it was just gonna hang out in the middle. So for the rest of the day, it really didn't go anywhere. Not even great for scalp opportunities. Very, very tight range, and it finished right in the middle against the mid. Right up against 2067, 75, 2068 for the close. Profile looks mostly Gaussian, mostly balanced. Some decent tails on both ends. Some decent tails on both ends here, showing an excess on the top, but also an excess on the low as well. The buyers stepped in below Monday's low and took it right back up pretty strong here. Did expect a lower low here. We didn't get it. So there's a loss there, but it's just part of the game. Yesterday's VPOC. Note that yesterday's VPOC right here at 2067 is in line with the prior day. So essentially these 2 days are behaving as one. They're really, you know, if we put a profile around these, we essentially have what would constitute the volume and trading of 1 day. You can see here the point of control 2067. Let's change the color for a second. Just make it bright green just to see it. So you can see here, nice taper on both ends. These 2 days have really strong balance right in the center with a value area of 2068 down to 2065 and the point of control 2067. But I'm looking at the bigger balance as we sit up here. So I've drawn basically a profile that encompasses the gap from Friday, the gap up from Friday, and the 3 balancing days together. And you can see that it's a P-shaped profile, a nice taper here, a nice LVN at 63.50. We broke through by 3 ticks yesterday before we get into the next small distribution. Not very much of a distribution below, but you can see that the volume on this point of control below is a lot less than it is up in the 67 area. So this is where we're trading right now, 2066.50. Market's just sitting sideways again, not expecting very much today, but essentially what the market's done is it made new highs, rejected them, and then it balanced above the high day's mid and has been unable to fall below that day's mid. Normally you would expect it to come down and test this value area to qualify whether or not this is in fact a fair price, and it has not been able to do so. It's been too strong to do that. So far we've held the higher prices. The expectation is for new highs when we get back. So looking at the overnight overall, the market just sat sideways through the Asian session, as it's often done, and then when the European session opened, it tested the high that was put in yesterday and the prior overnight session. You can see we have a double top here, 73.73, and now it's a triple top at 20.72.75. So it missed the high by a tick before finding sellers back into the middle. Profile is fairly boxy again. Lots of trading in the middle. Volume has been in line with the prior sessions, which is actually relatively lower than the norm in this product. And then the market slipped lower with the release of the numbers. You can see the spike down at 20.65 on the initial claims and spending numbers. And it has not recovered. So to me, it looks like the primary hypothesis for today is more of the same. It's likely to open here in value, in range, inside of the thickest part of this profile, this micro composite that we have. You can see the low at 65.25, basically in line with the IB low, and so I'm not expecting very much today. I would exercise caution as a trader, not to get yourself involved emotionally, as the market is just going to tiptoe around and not take any specific direction. Anyway, I'll leave you with that. I wish you a happy Thanksgiving and a good break. If you're trading tomorrow, watch your risk. I'm not going to be on tomorrow. If you're a stage 5 trader, please be aware that nobody will be at the office, and to keep the numbers to your clearing firm and your account information handy in case you need to be taken out. Good luck, and I'll catch you tomorrow. Take care.